Hi, this is a brief video talking about our updates to our standard tax reform plan to take into account the agreements made in Build Back Better. The proposed tax compromises will likely be enacted because they have the votes, and under reconciliation they can't be stopped. So it's basically a done deal, and it's deflating the market as people in the know are basically selling out, or at least selling a part of their gains, so that in advance of future increases to the tax. Because when they want to, if it's worth it, they'll take the gain rather than pay a higher tax on it later. So without further ado, here are the changes. As already proposed, the employer contribution to Social Security will be transferred to either a credit invoice VAT, which would be border adjustable, or it would be attached to an employer paid subtraction VAT if the possibility of personal accounts holding voting and preferred shares of the employing company, not Wall Street as a whole, also holding an insurance fund of employee-owned companies, again, not Wall Street as a whole. So there won't be any subsidy for Wall Street for personal accounts. And so the rates are 7.2% for the employee contribution. The ceiling would be $100,000. I'll explain why. Also, if the $16,000 floor, which gets rid of the need for an EITC, would be increased if the minimum wage is increased to $10 an hour. It would be the floor would be $20,000. Why is that? A full-time worker at the minimum wage should not have to pay the employee side of FICA, but if they work that full quarter, or whatever is required, then they should get the equal employer contribution, but not have to pay the employee. And without the EITC, that would not make anybody worse off. In fact, it would make them better off. The 7.2 rate would also be the bottom rate for wage surtaxes. The floor is raised to $100,000 a year. It was 85. And I'll explain that in a second. And then the ceiling was 57.6%. 7.2% is the quarter of the proposed capital gains tax increase, which is 25% plus the 3.8% Obamacare tax, which I would actually get rid of it and make and have a more broad-based tax, which you have to do anyway for Medicare for all, pay for healthcare reform. And if the employer pays the bottom half of the wage surtax, because it would only be on salaries, then that maximum would be $250,000. And again, it would start at $100,000 and go up in $50,000 increments, and would be 28.8% at the top. And then at $350,000, I added a $50,000 additional rate to keep the president's promise to not raise taxes for the anybody under $400,000. And again, at $350,000, it would be 7.2%, and would top out at 28.8, although the effective, or at least, yeah, the effective rate would, or the combined rate, not the effective rate, would be 57.6%. So now why 100? Why the raise to 100,000? Because 80% of the populace makes under 100,000, and their total income at 80% is 1/3 of adjusted gross income, meaning of the $12 trillion of adjusted gross income, 1/3 of it, only 1/3 of it goes to 80% of tax filers. Now, that's pretty extreme. So we're exempting them from paying income tax, although they will be paying a VAT as we propose. At 200, the wage surtax stops at the middle class tranche, the second third, 250,000, and then above 250,000, that's where the top third is, meaning any people who make over 250,000 get, some earn, some just take, not get, the top third of adjusted gross income. Now that's 4% of the population. 4% of the population get or take 1/3 of adjusted gross income, because they make enough that they actually do it. They actually do determine their own pay. They have that bargaining power that nobody else really has. So yeah, it's they pay more, and that's why after 500,000 they pay 57.6% in this plan, and that's not too much. And nobody is going to take less salary because their taxes went up, and I do mean take. So maybe they might actually pay themselves less, but if they can't with a 27 or a 28.8% capital gains rate, it won't matter if they pay themselves less and give themselves more stock benefits. It's still the same amount. That's the whole point of a rate that is unified. So again, the Democratic rate is 28.8% for capital gains. It would be 26% bipartisanly, but bipartisanship has left the building for now, and that is the sum of the changes. I will post this link to testimony in the future, and as well as the basic plan. Thank you for your attention.